My name is Drew Smith, and today I want to talk about closing costs, what they are, and how you can pay for them as a new buyer or homeowner. My name is Drew Smith. I'm a licensed loan officer at Military Home Spot Lending. My NMLS number, if you ever forget, just glance up here, 211-3580. And of course, you can look at the bottom of the screen there. I put all of my information. I'm easy to find. If you've got any questions or comments, put those below. I'll address them each individually. So first, let's talk about closing costs. What are they? So when you're looking at your loan, you've got two separate types of costs. You've got the down payment and you've got closing costs. A lot of times I get questions, especially on VA loans, and the question is, hey, I thought the VA loan was no cost. Unfortunately, that's not true. There's no down payment, but that doesn't mean there's no cost to it. Down payment is separate. So a down payment is really for the loan itself, and then the closing costs are the fees associated with it. So you've got FHA and conventional. You're going to need 3, 3.5, 5, sometimes up to 10% down payment. VA, USDA, no down payment requirement. You can do 100% financing. It's pretty sweet, but we still got closing costs. And then again, on your conventional and FHA, you have closing costs as well, so those get more pricey. So we've got homeowners insurance and property taxes. So when you buy a home, the lender will set up what's called an escrow account for you. It's a separate bank account essentially where they're putting some of your mortgage payment into this account to pay for your homeowners insurance and property taxes. But your homeowners insurance policy or premium needs to be paid up front, and depending on when you're purchasing, some property taxes might be due as well. Then you have to pad that escrow account with 2 months worth of reserves for each. So we're looking at 14 months worth of homeowners insurance, and then depending on when you're purchasing, it could be 2, 3, sometimes 10 or more months worth of property taxes. So we've got our escrow account. Then we've got discount points. This goes back to borrower circumstance, and it varies borrower to borrower. Each one is unique. Every interest rate is connected to the market, and the market fluctuates depending on what it's doing. There is a cost for current interest rates. Those are represented in discount points. It is a percentage of the loan amount. So you take those discount points, multiply it by the loan amount, and you get that cost. Now, I can't go into it because it's specific to each unique borrower. If you've got more questions, reach out to me individually. Then we've got people working on your loan. We've got in-house processing and underwriting. Those people got to get paid for looking through your documents, verifying everything, going through everything. You got the underwriter that's going to spend time comparing it to the guidelines, making sure that everything looks good. Then we've got third-party fees. So you're going to have an appraisal. The appraiser is going to come out. They're going to look at the house. They're going to compare it to other properties in the area. They're going to get us our appraised value. Then we've got title. All of this is going to the title company. They're going to be working on it, doing their thing. We've got the escrow officer, right? We've got the people that are working on your loan all over the place. Depending on what situation is, there could be dozens of people working on the loan, and that all adds up. And then there will be some other outside of the loan expenses, like any home inspection, things like that. We don't require them as a lender necessarily, but you as a borrower or a new buyer, you're probably going to want a home inspection to make sure that there's nothing wrong with the home. And if there is, you can kind of go back and forth and see if the seller is willing to do anything about whatever comes up on that inspection. So how can we pay for these? All right, so here's where it gets fun and exciting. So we've got 4 different ways that we can pay for our closing costs. We've got savings or checkings, money you have. We've got the seller, so we can ask the seller of the home to help us pay for that. We've got the realtor we can help ask, and we've got the lender that we can also ask. So first, let's talk about savings. So this has to be any money that you have in a checking account or a savings account. There are some cases, now I'm not a financial advisor, but I know my specific retirement accounts, I can take the money out for a down payment or closing costs on a home with no penalty. And then you just have to check your individual situation. You can use, stock market. If you just have stuff in the stock market that's not connected to a retirement account, you could just liquidate those assets and use that. If you have any crypto, it's not super popular right now, but it was pretty popular not too long ago. If you have any crypto, of course, it would have to be liquidated, turned into cash, and then you could use that. Then we can ask the seller in what's called seller credit or seller concession. Essentially, we are asking the seller of the home to take a reduced net profit and help us pay for our closing costs. The benefit for them, they get to sell their home. The real estate agent or the realtor. When we are asking for that, you have to keep in mind that you're asking them to reduce their commission and give that to you in the form of basically a credit to pay for your closing costs, and the same thing with the lender. So these two situations, you can go, hey, Mr. or Mrs. Realtor and lender, could you please help me out with some of my closing costs? What are your options there? So the lender, sometimes they can help with the discount points or reducing or paying for the appraisal, underwriting, processing, things like that. So if you are tight on some of these funds, there are ways that you can ask others involved in the loan to help you, and it's up to them whether they say yes or no. Remember, when you're buying a home, everything is a negotiation, so it never hurts to ask, and then you'll know. So if you don't ask, the answer is always no, so you can always just talk to a lender first, get an assessment or an estimate on what all of these costs would be in a home in your price range, and then you can start that conversation from there. So a realtor, they're going to know a lot more about the sellers in that market, depending on what's going on in the market. If houses are sitting longer, if they're selling like hotcakes, kind of just depends. They'll be able to give you a better sense on whether or not sellers are giving any concessions or credit to help buyers get into homes. So hopefully that answers some questions you have, or maybe you didn't even know you had. If you've got more questions, put them in the comments, send me a message, reach out to me. I'm always up and available for a conversation. Again, my name is Drew Smith. Like and follow for more mortgage tips.